Have you ever looked at a trading chart and wondered what those green and red bars really mean? Those are candlesticks, and they tell a powerful story about price movement without using a single word. In this quick video, I'll break down candlestick charts so even absolute beginners can understand how to read them and use them confidently in trading. Let's begin. A candlestick represents price movement over a specific time frame. This could be 1 minute, 5 minutes, an hour, a day, or even a week. It all depends on the chart's settings. Each candle shows 4 essential pieces of information. The open, where the price started in that time frame. The close, where the price ended. The high, the highest price reached. The low, the lowest point during that time. If the closing price is higher than the opening price, the candle is typically shown in green or white. This means buyers pushed the price up. It's a bullish candle. If the closing price is lower than the opening, it's shown in red or black, meaning sellers were in control. This is called a bearish candle. The body of the candle displays the open to close range, while the wicks or shadows above and below show how high or low the price moved during that time. Now, let's talk about patterns. Candlestick patterns help traders anticipate what might happen next, not with certainty, but with increased confidence. Here are 3 simple but powerful patterns to remember. 1. Doji, a candle where the open and close are nearly equal. It shows market indecision and can hint at a possible reversal or pause. 2. Hammer, this candle has a small body on top and a long wick below. It often appears at the bottom of a downtrend and can suggest a bullish reversal. 3. Engulfing, a larger candle that fully engulfs the previous one. A bullish engulfing signals strength after a downtrend. Bearish engulfing shows the opposite. These patterns become even more powerful when combined with support/resistance zones, volume indicators, and trend direction. But remember this. Candlestick charts don't predict the future. They give us clues about who's in control, buyers or sellers, and what may happen next. It's about reading market sentiment visually. So how do you get better? Practice. Open a demo account. Observe charts daily. Track how different candles behave during news, trends, or sideways markets. That's how real confidence is built. And if you found this video helpful, smash that like button, drop a comment below, and subscribe to AI Hustle Lab, your go-to channel for mastering trading, investing, and AI-powered tools that give you an edge. In the next video, we'll dive into the top 5 candlestick patterns every beginner must know, so make sure notifications are turned on. Thanks for watching, and welcome to the AI Hustle Lab family.